positive outlook for the business sector, the Aussie heading for 2-year highs against the greenback, and an improved labour market. But how's consumer sentiment looking? The NAB monthly business survey for June was released, and this showed a positive outlook for the business sector, indicating further improvement in both business conditions and confidence. Business conditions rose by a solid 4 points in June, back at around pre-GFC levels and well above the long-run average. It was also encouraging to see the index for capital expenditure plans over the next 12 months holding at solid levels. The lift in business conditions was largely driven by stronger sales and profitability, suggesting a much-needed lift in demand while employment conditions remain steady. On the flip side, consumer sentiment rose by a minuscule 0.4% to 96.6 in July and sitting below 100, where 100 represents the divide between consumer optimism and pessimism. The chart also shows the continued deviation between business confidence and consumer confidence. Add rising fuel costs and indebtedness to the average household, plus the expectation of rising interest rates towards a more neutral level of around 3.5%, and this will only exacerbate the current low household consumption, particularly if household income continues to remain subdued. In the last few days, we have seen the Australian dollar rally towards 2-year highs against the US dollar of 79.89 cents after failing to break through the low of 75.5 cents. The US dollar weakness started the turn of events for our currency due to their political woes and lack of clarity around the future direction of US interest rates. Improved conditions in China and higher commodity prices also helped our currency's newfound upward trend. After the RBA minutes were released, they concluded that with a 2.5% midpoint inflation target, this would suggest a neutral nominal cash rate of 3.5%, well above the current 1.5% cash rate. This helped to fuel a continuation of the upside in the Aussie dollar against a basket of currencies. In addition, improved labour market data showed an increase of 14,000 new jobs, with an unchanged unemployment rate of 5.6%. This further aided the Australian dollar rally. The Aussie against the euro has seen a continuation of the uptrend to 69.30 after testing lows towards 65.60 back in May. With soft Eurozone inflation, the market is expecting the European Central Bank to hold off on normalising their interest rates for the remainder of this year. Whichever way you look at it, a stronger Australian dollar would certainly put a smile on the faces of many Aussie tourists heading for a summer break to the Northern Hemisphere. Until next time, that's the market update from Bendigo Bank.